Yeah, that's a great question. So I jokingly say a recovering ex-NASDAQ CEO. So I'm trying to get back into doing a little bit more traditional angel investing, public market investing, and things like that, as opposed to just wearing an operational hat. It's been fascinating to watch the replication of treasury companies, not just MicroStrategy here, in the United States becoming a dominant force in terms of its Bitcoin holdings. Clearly, no one's gone all in quite the way MicroStrategy did. And then you just get the copycats. And there's two forms of those, right? There's the form of them where there's one company per stock exchange per country around the world. And you start seeing a treasury company in France and a treasury company in Germany and a treasury company in England and so forth. And I think that they're just trying to look over at what Saylor did and what Strategy's doing. And they're just trying to say, hey, I'm going to be the lone option for that in our markets, domestically in our country. And they're executing those. The Bitcoin Opportunity Fund has invested a lot of money to create, a singular Bitcoin treasury company per country or exchange all over the world. And it'll be fascinating to see if there's just one of those, like a Meta Planet in Japan versus, all the derivatives of them around the world. They're all getting a lot of liquidity. They're all getting a lot of investment interest. And in those foreign markets, their exchanges or their countries may be yield starved so badly that they want to provide money out of the bond market in those countries into equities and get Bitcoin exposure, but they just can't legally do it within those funds. So I think strategy is going to dominate in the US. I think you're going to see one treasury company per country or exchange around the world that will remain viable. What I don't really know is all the other copycats and what really is going to happen to them. So far, the best I can see is that, it requires an influencer or it requires a very known investor or some kind of institutional stimulus as to why anyone should care. And the best metric I've seen so far is the MNAV, right? Is you're at a discount if you're below one. You're kind of in danger if you have a premium to one and your name's not strategy. And you just see this churn. So I think that, everyone in your audience and the folks that I talk to at a retail level, I really try to encourage them. Okay, first of all, just buy Bitcoin. Like, why are you trying to get more cute? You don't have enough Bitcoin. Start with Bitcoin and just hold Bitcoin. And if you have brokerage accounts or 401ks or Roth or traditional IRAs in the United States or its equivalent internationally, a lot of people I still advise, okay, if you can't buy physical Bitcoin and cold storage it and self custody it, then the next best alternative is at least buy a Bitcoin ETF like IBIT. And at least you're getting exposure to the price of Bitcoin. And it's kind of weird to watch people who don't do either. They're like, I'm going to go invest in a treasury company. And I'm like, why are you doing that? I can't really come up with a good, compelling reason why somebody should be trusting the execution of a management team, the operations of someone trying to do something in parallel to Bitcoin. And even worse, a lot of these that are coming out of special purpose acquisition companies or SPACs that are already trading publicly, that have all sorts of equity overhang, warrant overhang, and they're basically taking this publicly traded SPAC, combining it with some other company, throwing some big name or influencers around it, and then saying, hey, we're going to be a Bitcoin treasury company, and this is a much better deal than just buying Bitcoin. So I don't really understand why people are doing that, to be candid.
It reminds me a little bit of altcoins, because this is the strategy usually used by altcoins of like, hey, we have a roadmap, we have a marketing angle, and then we'll just acquire someone that speaks for it, that has some respect in the field, like paying an influencer. Obviously, I know like an actual company is like vastly different than
Right.
than an altcoin, but if I just look at the feeling that I have from that, it just weirdly reminds me of them.
Yeah, and I also have spent my whole life just focusing on investment themes. And I invest heavily in those themes until I think the theme is played out. And so when I think about during my adult lifetime, I mean, I'm 56, so I'm a little bit older than you there, Robin. And when I go back to the late 90s, um, you basically had the Telecom Act in 1996, which triggered all this investment in privatization, telecommunications, and networking equipment providers. So you saw the entire change. I used to call it the Nellas, Nortel, Ericsson, Lucent, Alcatel, and Siemens. And then that was migrating to from time division multiplexing to internet protocol. And that migration from circuit switching to packet switching led to Cisco systems and Bay Networks and 3Com and all these other players that were going to come in. And at that time, the incumbents tried to say, no, we're going to build a bridge, to this new world order. And it wasn't a bridge, it was really a forklift. You just threw away the old stuff and you bought new packet switching and IP and internet centric protocol stuff, and it all went away. So the first theme was really this networking and telecom activity. In parallel, that theme was amplified, of course, by the internet. And what is the internet? Well, the internet comes out, we have a Netscape browser, and suddenly, in the mid 90s, we start getting really used to like dial up internet access and 56K modems and that unique little sound of an AOL email and all the access to the internet. So then the internet booms, right? And we went through that all the way up until it blew up in the late 90s. And that theme didn't go away. It just was very early. So there was a lot of carnage around what kind of business models to use and where did the financing come from. So you had datacom and telecom sort of start exploding and blow up. You had the internet expand and blow up. Then all of a sudden, Apple comes along with the smartphone, right? And we get one of these, and the iPhone shows up. And suddenly, when the iPhone showed up, the incumbents, which were people like Ericsson and Nokia and others that were doing wireless, and two things happened simultaneously. Countries around the world who had no infrastructure didn't have to forklift the old stuff and put wireless infrastructure. They all just went straight to wireless. But then instead of having, these flip feature phones, which there were 5 billion of, and Blackberries and things like that, smartphones came along, and the iPhone, it wasn't again a bridge. You didn't keep your flip phone and then, add one of these to go with it. You basically just threw the phone away and you went to the new thing. So the first three themes that I ended up playing a lot in was this theme of telecommunications and its parallel theme of going all wireless instead of wireline. And then you add this parallel theme of just all things are going to go to the internet and everything digital is worth more than anything that's analog. So those themes to me set a backdrop, which led into the next theme. The next theme was what we call FANG, right? It was Facebook, Apple, Amazon, Netflix, and Google. And the premise was very simple. More people will have a cell phone today than they did yesterday. And by cell phone, I mean a smartphone, not a feature phone. More people will be on the internet today than there was yesterday. And there'll be more next month and next year. And more people will be using wireless communications instead of wireline communications. And it was this evolution of just more next week, more next month, more next year, more next decade. And those themes played out. And then we had enterprise software tech and the cloud came along. So if you were really paying attention, you could literally invest in Apple in 2000 and hold it for 2 decades, right? You could invest in Netflix and hold it for 2 decades, or Amazon, or Google, or any of these because nothing really changed. So I just kept chasing these it's all going away themes for literally from the late 90s, mid 90s, late 90s, all the way until really 2020 when it became evident okay, the wire line to wireless theme has really played itself out. The internet is still there, but it's very mature now and has kind of played itself out. All these companies that went from a few hundred million or a few billion to hundreds of billions and then trillions of dollars in value, well, they kind of played out. All of these big tech and cloud companies kind of played out. So then you get closer to 2010, of course, and then new themes come along. Well, what were those? In traditional finance, that was payment systems and Visa and MasterCard, and more people are going to pay with plastic than cash than they did last month. And you're going to have more people using credit cards next week and next year and next decade. So Visa and MasterCard became a great theme to invest in as they IPO'd. And then along the way, you had PayPal and Venmo and all the sort of payment processors that were new rails that were being set up. And of course, the one that brought you and I together, Bitcoin. You get a white paper in 2009 and you get launches, and suddenly you say, wow, well, the whole central bank thing could just get replaced. There's not a bridge from the old financial system to the new. We don't have to have these rails that go from the old banking system and government and go to Bitcoin. We could just go to Bitcoin. And so you saw altcoins, or what you and I call shit coins, come along because everyone wanted to say, oh, there's Bitcoin, but look at all these great digital assets. And what really played out over the last 15 years? Nope, there's Bitcoin and there's shitcoin. There's Bitcoin and nothing else. There's Bitcoin, and why don't you just use Bitcoin rails like Lightning? And Lightning was suddenly going to destroy the Visa MasterCard. Lightning and Bitcoin were suddenly going to get rid of international remittances, right? And then what happens as you fast forward to now, you get more new investment themes. And the latest two investment themes are fascinating, right? Artificial intelligence, HPC, neo cloud hyperscalers. So all these companies that started investing in power, land, buildings, industrial hardware racks, alternative or renewable energy, waste energy. And they started making all these investments in the late 2010s, leading into 2020 through COVID. There were regulatory issues, there's land purchasing issues, there's interconnect, not only power generation, but power storage and transmission. And then suddenly you get this whole backdrop that led into NVIDIA and GPUs and chips. And what am I going to use for my, LLM or my large language model for inference and all these different artificial intelligence like OpenAI and Grok and Chat GPT. And so if you really take a step back and then you say, okay, well, great. Now we have artificial intelligence. Well, what is an artificial intelligence system going to want to use for payments? Well, Bitcoin again, like here we are, right? So if you kind of say 1990 to 2000 was a series of all this infrastructure tied to the internet and telecommunications and networking, great. Now we take it for granted because you and I are using voice over IP and video right now through this system to be able to do the podcast. And then in 2000 to 2010, you add that whole next evolution of the smartphones. You add the evolution to all of the rest of the components that we were seeing with large scale internet companies that were going to be the winners that were scaling across the FANG trade. And then once you got to about 2010, we transitioned into digital currencies, payments, and all the activities that was going to lead into how to fund everything that we were playing with the decade before. And now we're arriving at this next generation of what is Bitcoin going to do at scale? How does it compete against physical commodities and stores of value and medium of exchange and units of account and measurement? And how do you protect yourself from inflation? But meanwhile, let's get more efficiency, more productivity, more intelligence across the network. And that's where artificial intelligence kicked in. So when I do all those things, Bitcoin has now become the heart of everything you have to own. If you can't own Bitcoin, you should own Bitcoin proxies, but I don't think those are treasury companies. I think those are really um, the Bitcoin ETFs. And for folks who just will never figure out custody, and then when everyone says, oh, that's defeating the purpose of decentralization and you're just centralizing all over again, I'm saying, well, guess who screwed up? We did. The industry we're in screwed up because we allowed Celsius to happen and BlockFi to happen and Genesis to happen and Three Arrow Capital to happen. And all of these horrific things happen because you and I would say, I'm going to own Bitcoin, but hey, I want to get some money out of it without selling my Bitcoin. Well, how do I do that safely? Oh, I'm going to go pledge my Bitcoin as collateral, take the loans and either buy more Bitcoin or use it to spend or to live off of, write off the interest. But then all of our Bitcoin was stolen by Celsius and BlockFi and Genesis and the US bankruptcy system. So then what? Guess what? Well, now comes along JP Morgan Chase, right? The people that said, this is fraud, this is crime, this is rat poison, this is a joke. Now, guess what? Oh, sure, bring your Bitcoin as collateral. We'll give you access to the rails. Oh, you want a tax free event? Give me your Bitcoin. I'll give you the IBIT ETF, but now you can use that money for margin, collateralization, loans. And guess what? Now I don't have to trust that Celsius or some brand new group is going to blow up because at least it's JP Morgan Chase and we're doing this loop, right? And then the treasury companies, which are all influencers and scare the hell out of me. Outside of Michael Saylor, who's one of one with strategy, everybody else is like, hey, wow. I guess they didn't say I have a big OnlyFans account and I'm going to now do a Bitcoin treasury company with the spoils of our OnlyFans riches. We're just getting different kind of shitcoiners and people that migrated from a Wall Street boiler room into crypto. And I hate the term crypto. I hate the term digital assets. I love Bitcoin, but I appreciate tokenized assets because we're going to take real estate and every security that trades publicly, and we're going to stop having 9 to 5, Monday through Friday, bankers' hours, holidays, breaks. We're going to be like Bitcoin 24/7, 365. There's always a market. We're going to basically have Bitcoin. We're going to have Bitcoin rails. We're going to have Lightning Network sitting on top to replace Visa, MasterCard, and everything else. Great. But then we're going to tokenize all these physical assets and we're going to tokenize all these traditional Wall Street assets so we can enable 24/7, 365 trading and we can enable easy remittances around the world without going to these less developed countries and you find 20 to 50% of their GDP is based on international remittances from people working in the United States or Europe and sending all their money back home.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.